spent 25, maybe 35, even 40 years of your life planning, saving, investing, looking forward to retirement. But now you're facing a divorce. And if you're over 50, the financial risks can be enormous. I'm Jeff Hughes, lead attorney and co-founder at Sterling Lawyers. And in this video, I will walk you through the 7 biggest mistakes that we see Illinois couples make in a great divorce. The kind that quietly drain your retirement and leave you scrambling at the very moment you should be settling in. Mistake number 1, assume that you'll just split the retirement accounts. Retirement accounts aren't just another asset. They come with tax traps, timing restrictions, and complex rules. In a great divorce, you're not just dividing contributions, you're dividing the entire retirement future. 401ks and pensions, they require a QDRO, which is a qualified domestic relations order, or you could trigger early withdrawal penalties or get taxed on the full amount. But IRAs, they don't use QDROs. But if the divorce decree isn't worded right, the transfer can be treated as a taxable distribution. So don't just assume that retirement is just paperwork. Get it structured correctly. Mistake number 2, not planning for indefinite maintenance, also called alimony. If you've been married 20 years or more, Illinois courts can and often do award permanent or indefinite maintenance. And that means that alimony could last for the rest of your life. And here's the shocker for many. Retirement doesn't stop it automatically. You must go back to court and prove a substantial change in the circumstances. We have worked with clients that assumed that maintenance would just end once they stopped working. It doesn't. Not unless you take action. Mistake number 3, delaying the QDRO after the divorce is finalized. Your divorce gets finalized. You breathe a sigh of relief, and then you forget to follow up on the QDRO. That delay can be catastrophic, especially if the retirement plan changes or the participant retires or passes away before the order is processed. Every month you wait is a risk. So get the QDRO done immediately. The longer you delay, the more likely you will lose benefits that were already awarded to you in the divorce. Mistake number 4, ignoring survivor benefits on pensions. Now, let's say your spouse already retired and chose a joint survivor annuity, meaning that the benefit continues after they die. In a divorce, that does not go away automatically. If you don't secure that benefit in your QDRO or divorce decree, the pension administrator may cut you out entirely. But if you do secure it, even if you get only a small slice of the pension now, you may receive 100% of the payments after your ex dies. We've seen retirees unknowingly give up 6-figure benefits just because no one addressed the survivorship rights. Mistake number 5, overlooking Social Security timing rules. Now, here is a rare opportunity in divorce, but only if you plan for it. If your marriage lasted at least 10 years, you may be eligible to claim Social Security based on your ex-spouse's work record. And that could mean thousands more per year in retirement income. But if you finalize your divorce just months before that 10-year mark, you lose that benefit for life. Divorce timing matters. We have advised clients to wait just 90 days longer, and in the process, they unlocked a lifetime Social Security advantage. Mistake number 6, assuming you'll keep the house and be fine. Well, for many, the house feels like the last piece of stability, but keeping it often backfires. There are property taxes, maintenance costs, and worst of all, it traps your liquidity. You may own a $400,000 home, but have almost nothing in your retirement account to actually live on. We had one client who fought really hard to keep the home, but 6 months later, couldn't afford the upkeep and had to sell under duress. Sometimes selling and downsizing now means saving your retirement later. That brings us to mistake number 7, skipping a certified divorce financial analyst. Attorneys know the law, but when you're over 50, divorce is as much financial surgery as it is legal strategy. A certified divorce analyst will help you understand the real after-tax value of your settlement, project your long-term cash flow, and optimize asset division to avoid penalties and maximize your income. You don't want to wait to the age of 67 to find out that your half of the settlement won't actually last. The best time to find out what's financially smart is now, before you sign, not after. So these 7 mistakes, we see them all the time, unfortunately. They don't just hurt you now, they compound over time and destroy retirement security that you took decades to build. In our next video, we will walk you through the real cost of divorce in Illinois. Not just filing fees, but also attorney fees, court time, business valuations, QDRO prep, and everything that couples like you often don't budget for. It's the next step in protecting your future.